They knew at the end of the day, or the powers that be knew, that the only way to get out of this was for us to spend our money for expansion. So what they did is they decreased interest rates to lower them. Why? So we would not keep our money in banks. We would spend our money, retail sales, spend money, buy goods, plus encourage us to borrow more. So we're taking out more money, spending on new cars to put capital back in the system. Because they need us to inject our cash into it. When they're tightening, they don't. They want us to save our money. So tightening, potentially positive for the currency. Loosening, potentially negative for the currency. There's other things as well, which comes a part of fundamentals. Press conferences and minutes. Now, the market monitors press conferences and minutes released by central banks to try and read into when they may raise or lower interest rates in the future. Now, if the speaker is hawkish, the currency could get stronger. If the speaker is dovish, the currency could get weaker. Very good, Alexander. What does that actually mean? Now, if a speaker is hawkish, it means he or she is aggressive. When I mean aggressive in their monetary stance, as in dropping hints that they may raise interest rates, or that they may stop quantitative easing, or they may stop asset purchasing. They're optimistic about the outlook of the economy of their country. So when they're hawkish, they're aggressive, and that can potentially lead to a currency strength. It's called hawkish because obviously a hawk is a aggressive bird, a predatory bird. If the speaker is dovish, basically what they say in their press conferences and their statements, they're a little bit more nervous. They're not so positive about the outlook of the economy. They may drop hints of reducing interest rates. They also may drop hints of like further quantitative easing, etc., which is printing of more money. They're gentler in their comments. And of course, they're called doves or dovish because a dove apparently is a gentle bird. And this can be negative indeed for the currency in question. Now, the key central banks to watch out for includes the likes of the FOMC, which currently the chair is Jeremy Powell. The ECB, European Central Bank, current chairman of that, was it president, is Mario Draghi. And of course, Bank of England, Mark Carney. But there's more to that than just that. There's politics as well, and political impact on currency prices can be quite severe. General elections have, certainly over the last couple of years, have had a very large impact on a nation's currency. It makes sense. The change of government changes monetary policy and changes, the future of what that country's economy may do. Now, traders monitor elections in case they could cause political instability, which in turn can cause volatility in the currency market. And like I said, this is really due to the fact that the change in government could result in a change in fiscal and monetary policy. Now, prime example of this is the US dollar, Japanese yen on a weekly. This skyrocket of the US dollar against the Japanese yen, and indeed in general across many of the majors, was caused by Trump's surprise election win back in 2016. And he put the dollar on a massive bull run for several months. Now, this made sense because the market reacted first in surprise, but then on the back of the fact that Trump had promised severe tax cuts, which meant severe tax cuts, more money in the system. And this is why the dollar gained strength. This is the euro dollar on a weekly. And this is Macron's election win. Now, as you can see, the euro was on a great deal amount of pressure. Why? Because after the BRIC exit, there was great fear that a number of nations in the Eurozone and indeed in the European Union would indeed leave and follow the UK's example. And it put a lot of pressure on the euro. A lot of pressure on the euro. The French election, of course, was led by Le Pen, Marine Le Pen, and Macron. Le Pen was anti-EU, which meant that had she won, the chances of France leaving the European Union and moving on was quite high. Macron was, or is indeed, very pro-European Union. So when he won, the euro actually opened with a gap, because the election was held over the weekend, opened with a gap, and that caused a minor bull run for the euro dollar, in confidence that the European Union and the Eurozone will stay together on the back that Macron won the election. This is British pound, US dollar on a daily. Again, Theresa May called an election back in 2017. She did not win it outright. In fact, it led to a hung parliament, which puts a lot of pressure and stress on the British pound against the dollar and against the euro, and it dropped dramatically. Why? Because it was a hung parliament, which meant there was no set parliament or government there to be able to govern and run it. Excuse me. Natural disasters and conflict. This indeed also can have a great impact on the market. And it can indeed impact on the currency's value. Now, a breakdown in infrastructure, costs of rebuilding, decrease in consumer spending, and confidence can indeed have a negative effect. Conflict can also have a negative effect on costs of rebuilding, but it can also have a positive effect, i.e. what happened to the United States after World War II. Now, here's an example. This is gold on a monthly, and I know gold because I've traded gold a lot, and gold and I have a very close love affair. Now, I don't know if you remember, back in around 2010, we had the Arab Springs. A lot of conflict in the Middle East, a lot of concerns and worries, combined with the financial crisis. Don't forget, gold is a safe haven. People rushed their money into it. Gold went on an incredible skyrocket and actually touched an all-time high of just above $1,800, nearly $1,900 an ounce. That all changed, though, around about 2013, I believe, when Egyptian President Morsi, no, it was 2012, Egyptian President Morsi was removed from power, which meant up to this point, everybody was very concerned about the growing conflict and further thing of going out from Egypt and throughout the MENA region. When he was removed, meant the conflict slowly diminished and gold started to lose its value and started to collapse. This is gold on a daily. Doesn't mean the gold is always constantly on a downtrend. It actually means the gold reacts very much to conflict and to hints of political instability. Here's a prime example. Good old Donald, he likes to speak and speak his mind. Back in 2017, his comments of fire and fury and his verbal spats with North Korea, I have a bigger button than you, caused gold prices to soar. Why? Because gold is affected by any hint of conflict or political turmoil. Supply and demand. is another fundamental aspect you have to bear in mind and take into account. Like I said, any asset, including currencies, can be affected by supply and demand principles. More supply and decreasing demand can have a negative impact and vice versa. One prime example of this is when central banks introduce quantitative easing. What does that mean? Basically, it means printing more money. The more of something you have, the less demand you have of it, the less it is valued. The less of something you have and the more demand you have for it, the greater that value of that asset can go up. And here's two prime examples. This is the US dollar, Japanese yen on a monthly. During the financial crisis, Ben Bernanke, or otherwise known as Helicopter Ben, wanted to print more money. He did this by quantitative easing. And by doing that, he greatly weakened the US dollar against the Japanese yen. Again, huge amount of demand out there, less supply. But then, in 2013, he announced tapering, which means he was reducing quantitative easing, meaning there was less money being printed, and the US dollar then began to gain strength against the Japanese yen. Another example, euro, US dollar on a monthly. The ECB announces their own version of quantitative easing, which is asset purchasing, in January 2015. And it does indeed weaken the value of the euro against the dollar, and the euro came under pressure. Again, they printed more supply where the demand was weakening. Now, preparing your trading day. I'm not talking about technicals, but there's other technicals on other episodes I will do. But for fundamentals, this is what I would do. And it's always best to be prepared. Fortune favors the prepared. You know, it's best to be prepared for what might be around the corner. The outlook you should look at is preparing your trading week or even month. Of course, again, depending on your trading style. So I would always suggest you read the financial calendar, what economic events are due, what economic events are coming up, and read the financial news. Find out what the market is talking about. Bloomberg, Market Watch, FX Street, all these Financial Times you need if you really want to be taken seriously as a trader and seriously in understanding fundamentals. Then you really should be able to read up and understand what is actually happening, what is due, what the market's talking about, what's next event coming up, and what we should be keeping an eye on. Up and coming educational events for the rest of this month, we have on the 20th of February, episode 2 of my Exploring the Market series called What is Forex? This is purely for beginners, or for those who've been trading, maybe need a fresher course, because in my opinion, so many people rush in when they come into retail trading. They don't take the time out to actually understand what they're actually trading and how leverage or pips work. So I do suggest everybody attends that episode. And then on the 27th of February, Exploring the Markets, episode 3 will be an introduction into technical analysis. If you wish to ask me a question or speak with me, indeed, you can email me at my email address, which is alexander@olympusmarkets.com. On that note, can I say a big thank you for everybody who attended tonight. I hope you found it useful and insightful, and I look forward to seeing you on the next episode next week. Till then, every single one of you, trade safe.